Hello, good morning. This is Victor with Victor H Investing, and I wanted to do a live stream here on a Friday morning, May 31st, to talk about the stock market, individual stocks that are really moving, and really review the week. It's been a week where overall stocks are down. We've had two consecutive down days, but we'll see where today ends up. It's been a week where maybe some trends are beginning to form. Not sure. We had some good economic data come out today with regards to inflation. I wanted to talk about that and kind of form kind of an expectation for at least the next couple of months and maybe think a little longer term as to how it's going to affect the rest of the year. So I appreciate everybody that attends the live streams, and I especially appreciate comments. If you have a topic you want to take on, great. If you have a stock you want to look at, awesome. Let's keep it interactive. It looks like we've got one attendee. Learn with me. Thanks so much for joining. It's great to have you back. And just a quick reminder, I'm an individual value investor. I actively invest in stocks, really enjoy it, do a lot of analysis, and I like sharing it on YouTube. I also love these live streams. By no way am I recommending you buy any of the stocks that I'm going to talk about or sell any of the stocks I'm going to talk about. I don't give out any financial advice. Please make your decisions very carefully. So, got and Kidder on. Thanks so much for joining. It is great to have you on. Thanks for joining. Please bring up the topics you'd like to cover on this Friday morning. We're going to see the market open together. And oh man, Mike Victory, you read my mind, buddy. MPW is a good subject. So I would definitely talk about MPW. I don't know if you could see it, but let me go ahead and get out of this mode and get into this mode. So I am definitely going to talk about MPW because it's an interesting stock that's on the move. It is kind of a little bit of a long shot story that is becoming a valuable company. So I'm going to talk about that. But let me get started first with kind of looking at the market, looking at the economic data that came out, and then we're going to get into some specifics, and we'll go from there. All right, so the futures look like they're going to open a little higher, and I think it was driven by the economic data that came out. If we look at the data, the inflation report came in, and it was in line with what was expected. Now, what I like seeing is that inflation is at 2.7. If you look at the year over year number, 2.7% inflation. Now that's higher than I think everybody would like. You know, inflation at 2% is certainly the Federal Reserve's target. We're getting closer to it. It's a lot better than it's been historically. So that's really productive to have numbers that are showing that, hey, we're getting closer to 2%, and we didn't see an increase. Now, if inflation were to increase, it would be bad news for the consumer, people buying stuff, especially food. It's really creeped up, and that to me bothers me because I want people to be able to buy food and nourish themselves, and I think that's a necessity. But the other factor on a stock investor is if inflation goes up, the expectation is that the Fed's going to have to tighten the economy by increasing rates, which could be, another force on stocks for them to go down, especially high growth stocks, especially small and mid caps. Those tend to be very rate sensitive. So glad to see the inflation numbers were in line there. And I actually wanted to kind of show historically, right? So we're reading at 2.7, and that number is much lower than what we were seeing in 2022. I guess we're coming up on 2 years ago. Inflation was out of control, and it was really bad. Now, keep in mind, in the 80s, now I was a little kid. I didn't pay attention to the economy or anything. But historically, inflation was a really bad problem back then, and it caused really bad issues. So the inflation being where it's at today, I think it's a good place for the economy. And that sets up for the stock market to not have it be a force against stocks. So that's good news. And I think the stock market is reacting accordingly. We have Dow futures still up a little higher. It looks like the Dow is going to open up higher, the S&P is going to open up higher, and the Nasdaq are going to open up higher. Crude oil is a little bit higher too. Now, the one company I wanted to real quick. So for the last 5 days, I like to look at, okay, are we beginning to see a trend? This week was a shortened week of trading. It really was 4 days to this point, 3 days, and then today will be the fourth. And for the 3 days of trading this week, the S&P is down 1.3%. Not a giant, drop or anything, but it is 2 consecutive down days. And yesterday I thought was really interesting. You saw the semiconductor space really go down, and I wanted to focus a little bit there and see if I could see any trends that are beginning to form. So stock market was down. We'll see how high it gets today. We'll see if it keeps this rally. I wouldn't be surprised if it opens a little higher and then it ends on the negative side. Reason for it is we had earnings from Dell that were really somewhat positive, that, hey, they exceeded their revenue, they grew, but the expectation was so high on Dell that they were hoping to see numbers for AI products to be much better. The backlog was a big problem because they didn't see investors did not see a big backlog at Dell for AI related products. So this whole AI is going to be huge and massive. It's beginning to hit reality, which is, AI is going to drive some demand, but it's not going to be like Dell is going to double their revenue. No, nowhere near that. The one company that is benefiting is NVIDIA, and we know where their stock price is in the overall market cap. But a lot of these companies that have been kind of benefiting by just being associated with AI. I think they're going to have a hard time today and going forward. Dell being one of them, and the other company that just tanked was Path. We covered Path on Wednesday. It was really interesting because it was down on Wednesday, but yesterday it was down big. That's another AI company. And then if you look at AI software related companies, ServiceNow is being touted as, oh yeah, it's going to be a big AI benefiter. Yesterday it was down big. We'll see where it goes today. It'll be really interesting to follow those stocks and see if we're beginning to see a trend in AI stocks really coming down to reality. I think AI is going to be interesting. But I just don't know if it's going to be a very strong business. I don't know if NVIDIA is going to have great demand for a year, 2 years, 5 years. But one thing I would be willing to bet money on and invest money on is that NVIDIA is not going to keep this level of demand forever. It's just not possible. Companies cannot afford to continue to buy NVIDIA product for 5-10 years. They would have said, in essence, kind of spend all their capital on NVIDIA. That's just not possible. They would just not be able to do that. They have to spend their capital across the board among different technologies and different needs of their business. So we'll see how that plays out. All right. So let's get into MPW. So MPW, they haven't opened yet. It's supposed to open up higher. It had a modestly higher day yesterday, which is good. It was a down day yesterday, but today it's expected to be a little higher, much higher, 3.6%. And yesterday it was up like 4.4% or so. And the reason for it is they announced the regular dividend of 15 cents per share for the quarter. And that'll really support their dividend rate, which is really good. Let me take a look at their dividend over here. And their dividend, at 60 cents, it's a 12% dividend, and they can afford that dividend. If you look at their funds from operations, they can afford that dividend. The business continues to heal. They had a big problem with their biggest tenant having financial problems. They're working through that. They refinanced some properties in Europe and got a lot of capital out of it. And the ratio of loan to value, meaning the properties are worth a certain amount, and then the loan they got on those properties was 40%. So there's a lot of headroom on top of that loan they got in Europe. Not that they need it, but it's good that they have refinanced those properties at a reasonable rate. And I think going forward, I don't need MPW to start growing by leaps and bounds. I just need them to get out of the risk zone of people thinking they're going to go bankrupt. And with that, I think the stock will return near where it was just a couple of years ago, which was around $20 a share. If it could just get back to half of that, rate, we're up 100% on this stock. It'll go up to about $10 a share. If it goes up even close to what it used to be, we'll be up at, $17, $18 a share, which would be awesome, be a great return. Meanwhile, we're being paid 12% dividend. That'd be great. When we look at the statistics, let's look at short selling. So short selling on MPW, short seller shares that are shorted at 34%. That is a opportunity for me as an investor of MPW. I've been in stocks where, for example, Zim is a good example. Zim was at like 32%, 33%, number of shares being shorted. Their business ended up being better than was expected. And the shorts have just abandoned that stock. Like it's down to like 12% or so. And meanwhile, I've doubled my money on Zim in less than a year. So if this follows anywhere near the path that Zim took, and these shorts begin to realize, hey, MPW is here to stay. It's going to be a viable business, and they have to buy these shares to close out their position. That's going to be more demand on the shares, and it's going to increase the stock price. Again, this is a stock that I've studied. I've looked at it. I've covered it multiple times on my channel with videos. You can take a look at those. I'm not recommending you buy MPW. I'm not recommending you sell it. I'm not recommending you short it. No financial advice. I'm just sharing with you what I'm doing. But I'm really excited about MPW. It's one of those where, again, I like seeing businesses make it. Because if a business fails, if they go bankrupt, maybe they go bankrupt for good reasons. I get that. But there's a lot of people who lose their jobs, and I don't like that. And in this case here, these guys own properties that basically are hospitals and healthcare facilities and so forth. And that gets disrupted. And I hate seeing that too. So overall, MPW, I think is going to be a really neat stock to follow. We'll see if it starts rallying. Just to show you my quick valuation of MPW. And everybody commenting, hang in there. I just want to, finish my train of thought, and I'm going to get to your comments. Please hang in there. So we are at, what's the share price now? We're at $5 a share. So I got to update my stock price here. So $5 stock price is $5. So I still see that on average, I have a discount on MPW. And I value REITs different than most other companies. If you see most of my videos, I'm valuing based on discounted cash flows, but that's not the appropriate method to use with REITs because their cash flows are really high and they could really give you an inaccurate valuation for a REIT. Instead, I make sure that their dividend is payable, meaning they can afford it. And in this case here, their payout ratio compared to funds from operations is 60% at the current rate. And I think they're going to grow that dividend over time. And if we value that dividend, it gives us a 71% discount when you compare the value of the dividend versus the current stock price. I also value the company using their PE, their earnings per share, and earnings per share expected to be 42 cents. So using a modest growth rate, I get about a 4% discount on the stock. And this number, I think, is going to continue to improve as the business heals up and gets back on its feet. That's going to improve. So blended, and it's just an average, it's about a 38% discount that I still see on MPW. This is using a pretty high discount rate of 12%. And as these fundamentals improve, if they improve, this valuation increases. And a lot of investors will take notice, especially the shorts. The shorts will have to get out of the position unless they want to lose a lot of money. And this stock will be really interesting to take a look at. All right, so that's MPW. I'm glad that Mike, we were kind of on the same page on that one. It's fun to watch these small stocks make it. So you and I have a bunch of the stock. Yeah, we do. And I'm glad that it's working. So Kidder, I'm going to catch up on all comments and cover all the comments here. So CRM is interesting. Yeah, it really is interesting. Salesforce, man, I think that for Salesforce, the stock went down a lot, but I think we can kind of draw, if anything, some of the sentiment that's out there around technology. So I'm going to cover CRM, and let me cover all the comments, and then we'll get into these stocks. So learn with me. My request today: UPS, ACLS, ADSK. You got it. So UPS, I actually I cover it in a video that's coming out on. Actually, it came out. When you look at my video or how to value a company based on free cash flows. I used UPS in that video, by the way, but I'd love to cover UPS. I like UPS. It's a solid blue chip company that's been around for a long time. ACLS and then ADSK. So we'll take a look at those. And then, yeah, so if we can see MPW just be steady, I think we win, and that'll be cool. Shadow Guy, great to see you, man. Good morning from California, and I guess good afternoon in Switzerland. Great to have you. Thanks so much for joining, and thanks for all the comments that you always provide on both videos and on the channel. I really appreciate that. All right, so let's take a look at CRM. CRM was, so Salesforce is a big success story. It's a software company that, really has a purpose. They help companies give software and automation tools for the sales organization as well as the service organization. Those are their two big areas. They also do e-commerce software, among other things that are related to that type of value they provide businesses. And, the company has a large market cap, 211 billion. The revenue is 35 billion. Forward P is 24, not outrageous. Very small dividend, but they do pay a dividend. It's a buy according to analysts. I'm sure a lot of analysts cover it, and they're saying it's discounted. Of course, we saw a big drop in Salesforce yesterday. They're down 16% for the year to date. And I think what investors are seeing is the revenue looks good, right? I mean, this is good revenue. I'm looking at the quarterly, and if you look at the annual, it's also very good. Okay. Now, Salesforce did grow through acquisitions, which, in my book, it's not as good as organic growth, but hey, growth is somewhat growth. So that's good. But what they shared was their second quarter that they expect, which will close, 3 months after April 30th. They're expecting that's going to be a lower than expectations quarter. And that's what sent the stock price crashing. Now, what does that tell us about technology spend? It tells us a couple of things. One, businesses that are buying Salesforce products and other products in that category, they're beginning to be concerned that, hey, we can't let our expenses get out of hand because we're not overly confident about the next 24 months. They may be feeling like, hey, the economy's not going to grow very fast, so we shouldn't spend a lot of money. I form that sentiment. Okay, that's my qualitative kind of assessment. So that's one of the things I'm drawing out of it. The second thing is when you look at, Salesforce has been trying to push AI for a long time. I believe their app, they call it Einstein, and it's a chat bot. And it was supposed to be really AI before AI became this big hyped up thing. Um, and that has really taken off. So um, I think technology businesses are going to be careful with it. I don't think they want to overspend. They want to make sure that their businesses are going to be healthy and make it through this time. And um, I think Salesforce is going to be all right. I think they're going to be a good business. I would venture to guess that you could probably make this, if you value this company using their free cash flows, you're going to get a discount on this stock. I would expect that. Now, I have plenty of software companies in my portfolio. I'm not looking for another. But if you look at their forecast on their earnings per share, it looks really healthy. So their earnings per share is going to drive a very good stock valuation, which is why I understand that 34 analysts look at this stock and they're saying, hey, it's discounted. I would not argue with that. I think that, if you like the Salesforce business, if you say, I want to be part owner in that business, you can probably value this company, and their balance sheet's probably going to be in good shape. This is a quality company. So that's what I think about CRM, Salesforce. It was interesting for sure. This week has been really interesting because when you have this type of volatility, from my standpoint, it tells you about sentiment. Sentiment is that, stocks are expensive and investors are not waiting a whole lot of time to get out of positions that they feel I got to get out. And if we look at Salesforce, I like looking at it on Google because it gives me a better viewpoint here. Let's look at the last 5 years. You see here, it was really low at the end of 2022. And then before it had that crash, the stock was up 122%. So if you're an investor and you were smart enough to buy in 2022 and you're sitting on 100% gain, if you get any sniff of bad news, you're like, okay, I'm going to sell some of my stock, if not the whole position. So I'm seeing that type of sentiment that big money, smart money is getting out of these stocks quickly because they believe that the stock market is expensive. That's what I'm seeing. That's my observation of the sentiment. All right, so let's talk about UPS. UPS is a solid business, and overall, I'm going to kind of give you the conclusion of that video. You can watch it as well. The video is, and maybe I could just point to it in my channel. For the person that was interested in it, I'm going to point to the channel so you can view it at your leisure and kind of get the details. So when you go to videos, look for this one here. So how to calculate a stock using discounted cash flows. This is the one I used UPS. So I don't put it in there because I didn't want it to be, let me focus on UPS. No, I wanted, the viewer to see how we're going to do a discounted cash flow. And I did it from scratch, just completely organic. I didn't cover UPS before. I went to their investor page. I got their financials and then did the valuation there. So take a peek at that. I think you'd find it interesting if you're interested in UPS. Overall, I found that the company is discounted and it's a really solid business. This is a company that is going to be around forever. It's been around for, I don't know how many years, probably like 80 years or so. Trying to hit their profile. They were founded in 1907. Oh my gosh. They've been around for 117 years. That's phenomenal. And I think they're a solid business and they do deliveries, right? We need deliveries. Everybody's ordering stuff on e-commerce and you have, UPS is part of the delivery supply chain. The dividend is solid at 4.7. The analysts think it's, discounted by 20%. My conclusion on the video was that I'm going to wait for the stock to get a little lower before I'll enter the position. And the reason for it is, I just finished saying that the CRM, the Salesforce kind of conclusions I'm getting is that businesses are a little concerned that the economy is not going to grow very quickly. And really, for UPS to grow their revenue, we need to see consumer buying. We need to see the economy kind of speed up. So I think we're going to be waiting maybe a year before the forecast of that happening is going to start. So I'm going to wait around a little bit on UPS and wait for the price to maybe drop a little bit more before I take action on it. All right, let's take a look at the next one, which is ACLS. And everybody commenting, please hang in there. I will get to those. So ACLS, I believe, is the stock. Yeah. So this is a stock that I do cover on my watch list. So let me jump to that, kind of give you what I believe the stock is worth. And this is a good company. And this is a company that provides a lot of I'm going to call it, they supply the semiconductor industry. So they're not creating semiconductors that go, computers, phones, servers, data centers. No, they provide, they supply the semiconductor industry. And let me update the price really quick. And I think they're discounted by 22% if you look at their cash flows and you look at their earnings per share. I'm not currently an investor in ACLS. I think it was kind of potentially a modest winner for me, but I think that they're kind of small, and it's a small company, 3.7 billion, and small caps have not done all that great for me. I've been waiting around for them to rally for a while, and they haven't really had any long-term success yet. So I'm careful with small caps. This one here with the discount I just showed, it's not showing me that I'm going to get a huge discount. So if I'm taking the risk of buying a small cap, I need to see a better discount than that. And this stock has, come down, but I needed to come down even further before I'm a buyer, just because I want a greater return because I'm taking a higher risk. So that's where I'm at with Excelis, and I think it's a good business. I've looked into it. I have a video on my channel. If you want to search Excelis or ACLS on my channel, you'll see that video. So let's go to ADSK, and that's Autodesk. So I haven't looked at Autodesk in a long time. Wow, look at that drop. Holy smokes. So this is ADSK. So Autodesk, I think, for those that are not familiar with Autodesk, let's see here. They've dropped 24% since March 21st. So in let's call it 2.5 months, they've dropped 24% over the last 5 years. Wow, what happened? They have not been really appreciating their stock, which is interesting. Autodesk helps companies design products. It's design software for engineers and designers at companies. It has been kind of a pretty solid company for a long time. Looking at their financials, they have been growing their business. Okay. So why has their stock price been tanking? So, okay, their stock is looking okay. Where are these guys located? So United States, software technology, got it. San Francisco, got it. Their market cap's 43 billion, not bad. Forward P at 25. Analysts say it's a buy and it's discounted by 38%. And analysts are saying, yeah, discounted by 38%. 17 analysts cover it, so that's a pretty good number. And man, this looks like a discounted company. Now, another kind of observation that I have is software companies are being discounted. Autodesk, we're seeing at a company that's being discounted. Now, is AI going to disrupt Autodesk? I think a little bit, maybe. It might even make it better, though. Might like, hey, we have a tool set that helps you design products, and we have some AI baked into it that makes it helps you design products faster and lower your overall design costs and engineering costs. So But if you look at Autodesk, we just talked about CRM, that's a software company. Adobe went down. You look at, software companies across the board, they were really punished yesterday. And the market, what's interesting is the market acts very emotionally. It just makes these big moves. And those are opportunities. Those are opportunities where, hey, I like software companies. I've made money on software companies. I like buying software companies. I like their businesses. So Autodesk might be an interesting stock for a value investor. It's not going to be that interesting to me because I have already a string of software companies where I'm very well invested. Don't know that I want to buy anymore. It'd probably take a really compelling case for me to buy. And this one here, this is a good company, um, but they're not showing like screaming high growth. They're in a space that's not very attractive. This is design software for engineers. They don't get a lot of exposure, but overall, solid company, mid cap company, Autodesk. So thanks for the question on that. Hopefully you found that interesting. So, what are your thoughts on Lululemon? Thanks for joining. This might be your first time commenting. I appreciate it. Yeah, we can take a look at Lululemon. And let me catch up on comments. Tanya Myers, or is it Tony? Thoughts on Ulta? Yeah, let's take a look at it. I do have an opinion on Ulta. I've been covering that stock off and on for a while, so I do have some comments on that. What are your thoughts on Mara? Mara. Let's take a look at Mara in a bit. Shadow Guy, leaving on vacation for a couple weeks. Yeah, let's check out KBH. Have fun on vacation. Where are you going on vacation? And I am envious. So do you like Adobe at this price? So yes, I've been buying Adobe. I bought about $1,000 of Adobe yesterday. It's easy to get to that number because their shares are quite near $500 a share. Adobe, in my mind, is a quality company, quality balance sheet. Their product is, in my opinion, if AI does anything to Adobe, it's just going to make Adobe stronger, better. They're number one in their category. They're number one in their space. I like Adobe. Let me show you their valuation. I'll cover Adobe really fast, and then I'll get back on the list, guys. So, and this is, I think I have to update the stock price because it dropped quite a bit yesterday. So there's companies where I make money over time with them because they have volatility. Volatility is my friend. When you have a quality company and it drops like this, I buy it, I make money, I sell it, and then it starts dropping again, I buy it. And I don't buy like big, like, hey, I'm going to bet 25 grand on Adobe or 50 grand. There's investors like that, not saying it's right or wrong. I'm just saying that I'm not good enough to tell you, hey, I know this is the bottom. 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 But I think I'm smart enough to say it's discounted. So I'm going to buy for the next couple of months if the market keeps offering me Adobe at a discounted price. And then once it starts its rise, it's a little harder to buy because you're like, whoa, hey, I don't want to buy the day after it went up 5%. So having seen Adobe get down to about this level, I'm like, okay, this is a buying opportunity. I don't have a big position yet on Adobe, but I am buying shares, and I bought 2 shares yesterday. So that's my opinion on Adobe. Let's get back on our list. We're going to talk about Lululemon. So Lululemon. Up 80% over the last 5 years, down 6% over the last year. All right. So it's a $37 billion market cap, 22.9%. Analysts are saying it's 47% discounted. Let's look at their sales. Their sales are growing. Let's look at the quarterly. Their sales are growing. Whoa, what gives? Balance sheet is, so they have $2.2 billion of cash, Total debt is 1.4. So really they have no debt because they can pay off their debt immediately. Cash flow. Yeah, I'm liking Lululemon, but the cash flow is not really impressive. I think it's okay. So they're at 1.6 billion. So that would, I think that Lululemon is going to have kind of a fair price at this price level. And as an investor, I'd have to ask myself, do I really want to be an investor in Lululemon? And the answer is yes. I think their product is the leader in their category. My wife loves Lululemon. I don't think she's the only lady that loves. I mean, this product, this is like her wardrobe is full of Lululemon because I think it's really comfortable. I think she looks great in them. I think ladies love this product. So it's a dominant category or leader. So I'm going to look at this stock closely because I like buying leaders in a space because they can command better prices, better margins. When we look at their income statement, so they are growing their revenue. That's another qualifier. Like, hey, is their business doing well? Do customers like the product and they're buying it? And the answer is yes. See, their gross profit is really good when you compare revenue, cost of revenue, gross profit. The companies that create products, they create an item and then sell it to a company. They tend to have smaller margins as opposed to, Meta does social networks. Their gross margin is like in the 80s, like 85% margin, because they don't create anything. They don't have to pick, pack, and ship something to a customer. They don't have to buy materials and then ship those materials to the warehouse or to the factory, and then the factory makes the item. So for this company to be making this type of margin rate, it shows they're the leader. People are willing to spend more money on Lululemon product as opposed to their competition. So that's why I like leaders. Leaders can command better margins. So I like that about them. So overall, I think Lululemon, I put a circle around the name because I'm going to look closely into it. I like buying stocks when they're kind of down, but it's a quality company. So thanks for bringing that one up. Let's look at Ulta. So Ulta is a retailer, and they've done a terrific job. They have consultants in their locations that help ladies, and I'm sure a couple guys, really understand how to, buy the best products for themselves based on the appearance they want. I think it's great, but the consumer is beginning to get fatigued. And I covered Ulta. I decided that it wasn't the right stock for me. A couple of things is that the beauty category is super competitive. It seems like every 2-3 years, the latest company that's, really doing well is this other company. And then it's come another company. So these companies tend to lose momentum and then their valuations really go down. So that was one of the things that, I didn't feel like I had a knowledge advantage in this stock. So I got out of it. That's me, right? So if there's somebody else that understands beauty and really gets Ulta and really believes in the business, that's the right investment for them. And because their fundamentals are pretty solid. When we look at their market cap, it's a pretty reasonable market cap, 18 billion. Forward P is 14. Let's take a look at their growth. They have been growing. Looking at the quarterly, they continue to grow, although at a modest rate, but it's still growth. And so it's a growing company. And cash flow wise, they have 1 billion of cash flow, and the prior year was about the same. So 1 billion. You're probably going to calculate a discount on this stock, and let's look at their forecast. Analysts are saying it's 28% discounted. 23 of them cover it. So earnings per share is going to drive a greater valuation because of this growth. So you could probably get to a discount on Ulta. It's just really your qualitative assessment of Ulta is, do you want to be a stockholder in this company? For me, the answer is no, because I don't wear makeup. I don't understand this industry well enough. I don't understand when something is a positive trend, a negative trend. So I decided, you know what, that's outside of my sweet spot, my zone. I'll let other investors invest in Alta. So hopefully you found that interesting. Thanks for asking. So let's take a look at, Marathon Digital. Okay, what do these guys do? Marathon Digital operates digital asset technology company that mines digital assets, Bitcoin. Okay. All right. So I own Bitcoin. I've been buying Bitcoin since 2018-ish. My son, who's 19 now, he started buying Bitcoin like 3 years prior to me. I let him invest as a little kid. I thought it'd be good education. And he was bullish on Bitcoin. He mined Bitcoin, which was interesting. And he's the one that kind of got me interested to pay attention in cryptocurrencies. So, wow, look at this growth. Holy smokes. Okay. Marathon Digital, you have my attention. So revenue, $387 million of revenue. They are a $5.4 billion company. So you're paying 11 times revenue. Forward PE, only 562. All right, financials, take a look at their balance sheet. So cash, $1 billion. Any debt, long-term debt. So they can pay off all their debt immediately. Very good. Good job, Marathon. Cash flow. Net cash flow, 244 this year. Last year was negative 156. Bitcoin prices were down last year, 127. Okay, so this 244. Man, this one is interesting. Here's why it's interesting. When you're growing this fast, and like Bitcoin prices are doing quite well. I think Bitcoins are between $68,000 and $69,000 per coin. You have more scarcity in Bitcoin. Now, the one thing that is going to be a concern is the halving event happen, meaning when Marathon earns a Bitcoin or earns the conclusion of a blockchain, a ledger, they're going to be paid half as much. Like last year, they were being paid a certain amount. Now they're being paid half as much. So how's that going to affect them? But with these kind of growth rates, and what's their trend? So it's down. So over the year, 112%. It's here. Okay. Wow, look at their valuation. Not too long ago, they were at 75. So this one here, I'm going to circle and take a closer look after this. Just that growth, you don't see this kind of growth very often. And I'm going to take a closer look and see if I want to start a small position in Marathon. And this might be a good video to put out there, because I've put out videos on Coinbase. Coinbase has been a huge winner for me, huge winner. And I've done cryptocurrency videos, but this might be a good video to put out there and see what people think. So, all right, good question on that. And then the last one is KBH. I think that's one that was asked about. KB Home. So home sales, that's, so there's certain things that surprise me, and I'm like, wow, amazing. And I thought when we entered COVID, here's the COVID drop. I thought, well, home sales are going to tank, right? Who would be willing to buy a house when all this risk is around us? And the opposite, well, there was such scarcity of inventory that the home builders really did well. And look where the stock went. Just went great. 64%. So they continue to have kind of a home builders market, but is it too late to get into this, position? It's a $5.4 billion company. These guys build homes. It's a tiny little dividend. Analysts are saying hold. It's being priced at a premium of 5%. and sales are beginning to come down. Okay. So I'd be concerned about KB Home. And there's another factor is the latest housing data for the US is that sales in April went down. So there's been kind of a drop in demand and an increase in inventory of resale. So I think the party may be coming to an end for home builders. I would not be buying a home builder. I don't like the business. I don't think it has long-term possibilities enough of it. I was a investor in Lennar and I did well with Lennar, but it got out of that position and then just feel like, I could probably put my capital to work elsewhere. I would have loved to have been in Lennar, by the way. That was kind of a mistake. I didn't see it coming. And lesson learned that I don't know how to forecast pandemics. They only happen 100 years, apart. So I expected, hey, people are going to be really scared to buy a house during, the year, 2 years after the pandemic, because who knows what the economy is going to do? Am I going to lose my job? We had like airlines that couldn't fly people. We had so many things moving in the negative direction. But I was amazed that people were willing to buy those homes and they continued to buy them. But I think that demand is beginning to wane and inventory of resale homes have gone up. So that's really going to put pressure on the home builders. Good question. Thanks for asking. All right. So Talmiz 100, I think it's your first time commenting. Thanks for joining. I don't think Delta, because the shrinkage problems they have, I think the problem they sell is very easy to steal and there's no consequences to theft anymore. Yeah, retail is tough, man. Theft has always been an issue, and that's retail for you. GM, Baba looks like a good entry point, holds above 78 today. So this is S Travels. Good to see you, man. So are you asking about GM or Alibaba? GM. General Motors. So I think the car makers are discounted. I own Ford, but I can tell you out of the gate, Ford P of 4.4. These guys are growing and they produce a lot of free cash flow. GM is a solid company. So GM's not the right investment for me because I already own Ford. The one that's really crushed it is Toyota, but it might be a little late to get into Toyota. But I think GM's really well operated. They're growing. It's a icon to the U.S. economy. So they've been doing well. All right. Thanks for the question on that. And did you want to talk about Alibaba? I produced a video on Alibaba, and it's done really well. A lot of people have watched it. It's on my channel. If you want to take a look at that, you can see a full valuation. I have been buying into Baba. I have a pretty big position in Baba, and I'm glad that I'm buying into it. There's other Chinese companies that are really looking good now. So that's my opinion on Alibaba. All right. So one negative on Marathon Digital is they can issue more stock. It's already approved. Yeah. Good point there. Yeah, just that growth, man. Holy smokes, that was some really impressive growth. And that can change, but it's really hard to find companies like that. So I'd like to follow a company like that. If anything, it's just interesting. So Mike, I also have crypto, including Bitcoin and Ether. I have Bitcoin, Ether, and then I'm in a liquidity pool. I don't have a major part of my portfolio in cryptocurrencies. I have roughly about $140,000 collectively in Bitcoin. Bitcoin being the biggest of that amount, Ether, but Bitcoin has been a great performer. When we look at, looking at the wrong, I don't think this one looks at Bitcoin, so I got to go back here. So when we look at Bitcoin, it's really just taken off. And I started investing back here. It looked great. And then it collapsed. And then I bought more. And it's really taken off. Over the last year, it's up 151%. I mean, that's great. Ether is not quite that appreciating, but this space, it's not a giant space right now, but to me, it makes sense. I'm like, everybody's like so excited about AI, right? Well, AI is obviously computers that are going to be doing stuff. If we look about the economy that we're going to have in 10 years and 20 years, are we going to rely on a fiat currency, which is the traditional currency that the concept was, hey, print or press coins and then use those coins and printed money to do transactions? No, I think we're going to go to digital formats. As international business expands, which it's already massive, is using the Bitcoin potentially a better store of value? In my opinion, yes. Is using Ether and the Ether network a good idea? Yes. All these ideas are like have high potential. And investors, again, Coinbase has a market cap of 58 billion. So it's not the biggest financial services company in the world, but the return has just been phenomenal for me. So I'm glad that I got into Coinbase. I bought shares. I kept the shares. They generate great free cash flows. So that's my opinion on Bitcoin, Ether, and Coinbase. Thoughts on SYM? Symbotic is an automation technology company, engages developing technologies to improve operating efficiencies in the warehouse. Okay, so this is a warehouse software company or technology company, and they're out of Massachusetts. They're $21 billion valuation, 1.5 billion. They do lose money. Let's take a look at that. And forward P is 160. They are growing really fast. Awesome. A 1.1 billion in revenue. They're losing money, but not a ton. It doesn't look like they're losing a ton of money. They are producing free cash flow. Man, this looks impressive. This is another software company, I believe. I'd have to look at it closely. So specialty machinery. So what do these guys do? Robotics and stuff? So developing technologies to improve operating efficiencies in the warehouse. So this one here is really interesting. I'm going to take a closer look. I think it's worth taking a look at and see if it's a good investment, because it's a really high growth company. They have a lot of room to grow. Warehouses are not going to go anywhere. I keep ordering stuff on Amazon. It keeps showing up, and I'm very happy as a customer. And I think there's billions of people that feel the same way. So we have to have warehouses, and warehouse, have to continue to get better and better and better. So I like this company enough to invest some time and analyze it further. I'll take a look at it. Thanks for the suggestion. Oh, good morning, Alibaba. Thanks, man. Thanks, Mike. Thanks for interpreting that. Well, I looked at GM and Alibaba and provided a comment, and I have a good video on cool. Thanks, man. Thanks for clearing that up, guys. Check out Snow. So yeah, Snow has had another software company. Boy, we're talking a lot of software today. It is a good morning. I like software companies, but look at this year to date. Whew. Now this was a darling a couple years ago when they IPO'd. We're going to change the world, and give us $400 a share. Now it's really collapsed. So this company, I think that this company has been growing. Their space, I believe, they do a lot of like big data analytic kind of solutioning, and understanding that they have some big competitors like Microsoft. And I think that's their biggest threat is the big competitors. Are they going to like make this space relevant to them? And are they going to eliminate Snow? Potentially. Snow will always say, oh, but we're different. We're better. Maybe. They have a lot of cash, very little debt. Very good. Cash flow wise, they produce a fair amount of cash flow, about 800 million. They are high growth. Yeah, these guys, I'm not sold on their business. That's the primary problem I have with them. They're, according to analysts, 36 analysts cover it. They're saying it's discounted by 45%. But I would argue that, is Snowflake's success temporary? Are they going to last? For example, we talked about Salesforce earlier. Salesforce actually competes with Snow to some extent. And I think Salesforce would like to keep as much of the revenue from that customer as possible. And that's what Snow's always going to deal with is, hey, the software industry is a pretty mature industry. And some of these big players are quite good and they're quite powerful in the economy and in accounts and in companies. And is Snow going to feel like, hey, we're being squeezed out by the bigger players? That would be my main concern. So I think Snow has very good fundamentals. Their growth is impressive. It's just not the right investment for me. So Shadow Guy going to Greece, island of Santorini. Man, have fun, man. I have Greece on my list as well as going to Switzerland, of course. Have fun. So have you looked at Path lately? So we looked at it on Wednesday, but it's worth looking at it again because it's kind of like one of those, situations where it's kind of hard to believe. But Path, I think the big news was that the investigation and their CEO is leaving, right? So yeah, so we have that going on, and then CEO is leaving. So investigation and the CEO is leaving. I'm like, I'm like, hey, this is too radioactive for me. I need the dust to settle. I've worked too hard for my money to lose it, knowing that I should be very careful in this situation. Their revenue is good, but they're being investigated and their CEO is leaving. It's like, that's not a good combination. I got to let that clear up before I could ever be interested in a stock like this. Cash is good. Long-term debt's fine. Cash flow should be good. Yep, free cash flow is good. This is another technology software company, and they have a robotic process automation solution. So you can kind of teach this technology repetitive task on your computer or in your business process, and it could do them for you. It's pretty neat. But again, if they didn't have this investigation and if the CEO wasn't leaving, okay, let's keep looking at it. I'm kind of a little bit of hey, there's just too much there. I got to let that clear up. If anything, other investors are going to be really scared about it. And even if the fundamentals are good, the stock's going to struggle, in my opinion. It's down to $12 a share. They IPO'd and they were at $80 a share. And now they're way down here. So when an investor looks at this graph, they're like, oh, I'm not going to touch that. That's too risky. I'm going to kick myself if I buy the stock and then it goes bankrupt because, for some reason with what happened with the investigation or the CEO left because there was some really shady thing happening. That's the kind of stuff that, I don't know for a fact that there's anything shady going on with this company. It's just, that's what goes through my mind when a CEO is leaving and you have an investigation. So that's my opinion on Path. That's what's been going on. We'll see what happens with them, but there's just too many good opportunities out there for me to put my money into a risky company. Buffett's latest buys, Chubb. Yeah. And, so I'm going to say a couple of things about Chubb. So is it CB? Yeah, Chubb. So Chubb, obviously, it was a good stock to own. Buffett tends to buy really good stocks, and you see how he bought it. This thing was already up quite a bit, but he's like, you know what? Insurance is a good investment. So it says a lot about a couple of things. One, it says a lot about Chubb. Great, awesome. But it also says a lot about the insurance business. The insurance business is doing really well. I own Allstate and Prudential. They're doing really well. So it was good to see Chubb get acquired. This company, I did look at it. It didn't provide a big discount. I thought that I could get a better discount on Prudential and Allstate. Prudential being probably the bigger of the two being discounted. So I think Chubb is really interesting that Buffett bought into insurance. Not the first time. He loves insurance companies, and this is a solid company. $108 billion market cap, really low dividend. If you look at Prudential, that Prudential pays like 4%. And I think I've done really well with Prudential. Like in the last year, I'm up 40, 50%, and they pay that 4% dividend. So I'm a very happy camper. All right. So this is a good time to take a look at where the market is at. Let's take a look at the stock market real quick, and then we'll wrap things up. So the Dow is up 0.11, S&P is up 0.10, NASDAQ is down 0.14. As I expected, yesterday and the day before, to me, communicate that investors are a little worried. They're a little scared, and it's good. I thought there was too much greed going on, that we're pumping up a lot of stocks. The Russell small mid-cap stocks are showing up today. That's very good. HP did great, I guess a day ago, and now it's giving up 7%, but it went up 16% yesterday. So net of a positive 9, I will take it. I'm an HP investor, so I'll take it. So we'll see where it goes. So the VIX is kind of calming down. It had really risen. When it gets really high like this is like the April timeframe where we had that 5% pullback. So we'll see where it ends up. But for now, I think today is going to be kind of a slow day. Let's take a look at what was a couple of big stocks that moved a lot yesterday. One of them was NVIDIA. What the heck's happening with NVIDIA? So NVIDIA is up modestly, but it was down quite a bit yesterday. It went down quite a bit. It went up a lot on 28th. I'm releasing a video on NVIDIA later today, and keep an eye out. I won't spoil the headline, but I think it's going to be interesting. So keep an eye out for NVIDIA. What's happening with our friends at Dell? Oh boy, not a fun day to be a Dell investor. It's really crashed. This stock, up 209%. This is a hardware company. They create products, and let's look at their financials. Remember how earlier I said, hey, Lululemon really has a really good profit margin. You remember that piece that I kind of covered? When we look at Dell and we look at their financials, they have, here's their revenue. Look at their cost of revenue, 67.5. Their margin is much tighter than Lululemon. And Lululemon, not to, badmouth any industry, it's a garment. It should be the other way around. Dell has to hire engineers, and it's an electronic product, and they have to do like supply chains and manufacturing, and it's really complicated. Yet they make less profit margin than Lululemon. They make far less profit margin than NVIDIA. They make less profit margin than like a CRM, Salesforce. And this is why intellectually I'm like, this is broken. This is wrong. A hardware vendor should not be priced this way. But the AI hype has really pushed this stock higher. This is on the list of NVIDIA buddies, NVIDIA friends. And the NVIDIA CEO has pointed to Dell saying, oh, they're one of our, go-to partners. Yeah, great. But NVIDIA is not going to help their margins. And when Dell announced their backlog, meaning here's all the orders we've taken, we haven't filled up yet, or we haven't shipped out yet, it didn't impress the investors. It actually alarmed them. They're like, whoa, this AI thing is not really creating a whole lot of demand, and they're having to compete to sell servers in the AI space. So the margins on the servers for AI are actually worse than the rest of their business. So it's like, oh man, the worst of all cases. So that is Dell. All right, so we're gonna go another 5 minutes. Thoughts on WEN, W-E-N. Wendy's, restaurants. I stay away from restaurants. I just think it's too tough of a business, but let's take a look at this one. So this is a small cap, 3.5 billion. Revenue is 2 billion. Forward P 16.9. nice dividend over the last 5 years. So this is why I stay away from restaurants is, how can I hang my hat on this? Like, is it going to go up? Is it going to go down? It doesn't have a long-term, price appreciation. So my first step on stocks is always qualitative. Do I want to be a part owner? And frankly, I don't want to be a part owner in a restaurant because it's so hard. I appreciate everybody that operates restaurants. I like eating at good restaurants, but when it comes to investing my money, I'd rather invest in like Meta. Meta makes so much darn money. Their margins are terrific, and I'll go to restaurants and give them a good tip. So that's my opinion on restaurants. And these guys are growing. That's good. Cash flow should be decent. But these guys are dead on my first, area of review, which is the qualitative decision on if I want to be an investor in a restaurant business. And the answer is no. I also think that Chipotle is way overvalued, way overpriced. And I think that's going to have a bad ending for investors. One of the reasons that I formed that conclusion on Chipotle is that I'm in Southern California. We have terrific Mexican food, terrific. And when you go to a Chipotle and you have a burrito there, they have really it's terrible. The food's terrible. I used to like Chipotle and now I cannot stand it. I'm like, the quality levels just dropped off so much that, I'd rather go eat good Mexican food, usually not a chain. And I think Chipotle is way overpriced as a stock. DLTR. So DLTR, Dollar Tree, retail, discount retail, another space that I'm not going to get into. I've lost money in this space, and I don't want to continue to lose money. 25 billion, one times revenue. Sales are growing. When we look at margins, you look at this. So gross profit isn't bad for a retailer, and they are losing money. Okay, free cash margin 1.89. See, these free cash margins are really low. Yeah, you could probably, if you know when to buy and when to get out of a stock in a retail stock, you're going to do okay. But you see this 5-year chart, it just doesn't give me long-term appreciation. I want to see long-term appreciation. Even if it's like, let me show you the Coinbase stock. So Coinbase, if you look at the 5-year, it had, it IPO'd and then it came down. But you see this now. You see that, hey, it's up and to the right. Look at the 1 year up and to the right. I got to see that in a stock, not necessarily immediately, but I have to have the expectation that that's going to happen. That's why I invest. Cool. You found me on Scott's page. So I owe so much to Scott. I've been watching his videos for 4 years and learned so much from him and appreciate all the videos he does. And it's great that you made it here through Scott's due diligence. Scott is going to join me on Sunday. We're going to do a collaboration live stream. We're going to talk about the market, and I'm really going to dig into the AI space. I think it's interesting to see where are we with it. Is it going to go up? Is it going to go down? I happen to think it's going to go down, and I'm going to bring my argument to that conversation. I'm going to point to some facts. I think it's going to be interesting. And Scott obviously is brilliant, and it'd be great if you can make it and everybody else can make it. Thanks for joining. Thanks for joining. Your first time commenting. Appreciate it. So I talked about Ulta a little earlier, and I'm not big into Ulta. I think some people could be because it's, I think, a good performing company, but I'm not into Ulta. Sergio, very nice to see you, man. You're on vacation too, dude. Everybody's going on vacation except me. Have fun, Sergio. Have fun for me, please. How about ETF ticker MJ? I'm not a big ETF guy, but I think they are a good idea in some areas. Amplify Alternative Harvest. Amplify is an exchange traded fund based on Prime Alternative Harvest Index. So these guys are looking in the cannabis space, tobacco, maybe this might be a good investment. I heard that cannabis um, is now consumed more than alcohol in the United States. So it's surpassed alcohol as a product, and it's really cannibalizing, especially wine. Like wine sales are really down because people prefer cannabis. So this might be an interesting one to take a look at. They don't have a payout ratio, 1-year return. For me, this isn't the right investment. I'm not into cannabis. I'm not into this stuff. But if you are, this might be a good alternative, or maybe buying one of the cannabis specific stocks. Nathan, thanks so much for showing up, man. Really appreciate you. And then Matt. Applied Materials. So these guys are in the semiconductor space. I think I covered a company earlier that they supply the semiconductor space. That's what these guys do. They provide products and materials to the semiconductor space. 178 billion, and they are going up and to the right. The one thing I'd be concerned about is that volumes of semiconductors are not going up. Just like Nvidia, they charge so much for their product that it's really swelled up their value, but it doesn't mean that they're driving increased volumes in the space. And you can look at the volumes that are being produced by Qualcomm, even Broadcom, and you see that, well, the volumes aren't really changing that much. And the reason I call that out is Applied Materials is really driven by a volume of semiconductors being produced. So I'm not observing that it's in high demand. You can see their growth really slowing. So that kind of coincides or aligns with the comments I just made. And look at this. So my comments, right, are being reflected in the data. So that's my first concern. Second concern is paired up with their valuation. So volumes aren't going up, but their stock price is up 61%. What's wrong with this picture? If volumes are down, your stock price should be down because you produce a product and material that goes into that supply chain. So this one here, I'd be very, very concerned about. I would run an evaluation, excuse me. It's saying, like, analysts are agreeing that it's fairly priced, and I don't buy fairly priced stocks, especially if I think that it's risky. And I think this one's a little riskier right now. Their earnings per share are going to grow. So this one I'm not excited about. I'd be very careful about Applied Materials. Thanks for the question. All right, so I'm going to wrap it up, guys. Thanks so much for showing up. Brian, thanks for coming in. Mike, thanks for showing up, man. I covered SoFi, I think, last week. I did not like SoFi. I like Robinhood. I like other fintech. Nathan, thanks so much for showing up. Everybody, thanks for showing up today. I really appreciate you. And thanks for all the questions and comments. Let's see what this stock market does, see what it's going to do going forward. There's always an opportunity to find stocks. And I think if these stocks, look, the market's down, if they continue to sell off, it makes it easier for value investors to find good stocks. It's not fun to see our portfolios go down in value, but it makes it clear that, hey, I really love this company, and now I'm being offered a 10% discount on the previous price. I'll take it. Thank you very much. Like Adobe as an example that I used earlier. So everybody, I'm sorry that I didn't get to the very last few stocks. Please come back next time, or we'll cover those stocks later. But everybody, thanks for tuning in. Everybody have a great day and a great weekend.